Hello to everyone in the Great Lakes State. It is Mike Guterri, and if you're seeing my face, if you're hearing my voice, well, first off, I'm sorry, but that means that it is time to start looking at, considering, and picking a health insurance plan for the new year. Hopefully, you've had a great year. I'm older, I'm fatter, I'm balder, but I did get married, so yay me. But want to jump into what is happening in the industry because it was another big year in regards to the health insurance industry. A lot of it was good, but want to make sure you're aware as to what's happening in regards to health insurance for the new year in the state of Michigan, because it's coming up on time to pick that plan. And we want to make sure that you make the right plan choice. So I am going to start off by sharing my screen. Again, this content is specifically for those of you who are pre-Medicare. So you're under the age of 65, living in the state of Michigan. This content is tailored specifically to your situation. So first, let me just take a minute and remind you who we are here at Health Markets. So we work with health, we work with life, we work with Medicare, we work with long-term care, but more importantly, we do it with pretty much every carrier that's out there in the market. And so what that means is we are not going to steer you towards a plan or away from a plan. We're not going to sell you. My goal is to make sure you're educated. You don't like the plan you're on? Great, we'll find a new carrier for you. We want to be advisory in regards to our approach to the industry. That also means that we work with pretty much everyone in every age group, whether you're in your 20s, whether you're on Medicare, we work with all of it. So please tell your friends and family that we can help them regardless of their situation. But most importantly, at Health Markets, we have the best price guarantee. Because of the fact we work with pretty much every plan in the market, it doesn't matter if you get your plan through the marketplace, through a different agent, through the carrier directly, or with us, price is going to be the same. So you're never paying for my services. You're never paying for our expertise. We're just giving you that at the best possible price. So let's talk about the industry, because this was a big year. So a lot has happened. First, the American Recovery Act was, repassed, if you will. So what that means is expanded subsidies. They're going to be here for another 2 years. So for those of you getting a government subsidy, congratulations. You're going to be able to continue to get it at least for the next 2 years, assuming your income doesn't change. There's also, though, going to be Medicaid redetermination coming in the first quarter of 2023. So if you know someone on Medicaid, or if you were on Medicaid, there is a pretty strong likelihood that that's going to go away. We hear that there's about 500 to 700,000 Michiganders who are going to lose their Medicaid eligibility come the first quarter. So be on the lookout for those letters. And when it happens, we'll be more than happy to help you. We'll be more than happy to help you find the right plan for yourself. But even more importantly than that, because this one's going to impact millions of people, is that the family loophole was closed. Now you might say, Mike, what's a family loophole? Well, it's pretty simple. For those of you who get your health insurance through an employer, there's a lot of employers who cover the employee really well, but don't contribute to the spouse and kids. So your family plan still winds up costing $1,000, $1,200, $1,500 a month through the employer. Well, the government has now said, if your health insurance through your job costs more than 10% of your household income, you can opt out of it. You can get government subsidies and you can get your own plan outside of your employer. So yes, if your health insurance through your employer is costing you more than 10% of your household income, this change in legislation could save you thousands. So please, anyone that you know that gets their employment or gets their health insurance through their employer, they need to be aware of this change, because it will literally impact millions upon millions of Americans, and no one knows about it unless they're educated. So that's why we're here to teach you what's going on. So what hasn't changed? Well, short-term plans in the state of Michigan continue to be 6-month plans. And so we'll tell you why that's a negative here in just a minute. The share plans, those faith-based Christian share plans, continue to see large rate increases, continue to see customer service issues. They continue to struggle. And lastly, the mini meds of the world. Yeah, those telemarketers who call you up about that $99 plan that covers 100% of everything, they're becoming more and more common. The telemarketers aren't stopping. They're continuing to tell people all sorts of lies and, not disclosing all the information. So rest assured that when you get a phone call from a telemarketer, they are selling what is called a mini med. And we'll talk about that here in just a minute. So let's drill down just a little bit deeper. So there are 4 types of plans that you can get out there in the open market: major medical, which is Obamacare; short-term medical; fixed indemnity, which are the mini meds; and then those health sharing Christian-based non-actual insurance plans. So what I want you to do is take this video and just pause it for a minute and look at the columns to see what coverage is right for you. So as an example, if you want maternity coverage, you'll see there's only 2 options out there for you. That's going to be an Obamacare plan or a health sharing plan. So go down that left-hand side, see what of those categories is important to you so you can find the coverage that's right for you. See all the check marks with Obamacare? That's why it's the most expensive. See all the red X's with the short-term plan? That's why it's the least expensive. We work with all of them, but depending upon what type of coverage you need, that's what we're going to find based on your situation. We're going to research it, consult you, and put you in the right plan for yourself. But this is a good visual to give you a great overview. So let's go into each plan type and explain to you what the positives and negatives of them are. So Obamacare will continue to be the most expensive plan if you're not getting a government subsidy. The reason it's the most expensive plan is because it covers maternity, covers your preventative maintenance like your checkup, it covers your pre-existing conditions, so it gives you that well-rounded coverage. The downside, of course, outside of the cost, is the fact that it is a very predominantly HMO-driven market, which means you must stay within your network of doctors and hospitals. Yes, there is one PPO, it's Blue Cross. Well, Blue Cross has a PPO as well as an HMO, but the PPO through Blue Cross is priced absolutely ridiculously. I mean, I don't know that anyone has ever paid the extra money for the Blue Cross PPO because it is priced out of this world. Now, granted, it's getting a 3% rate decrease, which means it's going from super expensive to just very expensive. But all the other plans out there are getting roughly an 8, 9, or 10% rate increase. Now, that's both bad news and potentially not bad news, depending upon your scenario. So for all of you out there who are currently getting a government subsidy, a 10% rate increase isn't a bad thing. You know why? Because when the price of your plan goes up, the government subsidy also goes up. So you may see no change in your cost, even though the plan went up by 10% because your government subsidy will increase. But if you're someone not getting a government subsidy and the industry is going up by 10%, I'm sorry to say, your plan is also going to go up by the same. And so while this is industry-wide, there's really no way to get around it if you're on an Obamacare plan, because all of the plans are getting an 8, 9, 10% rate increase. The other thing you need to be aware of are the dates. So November 1, just about 10 days from now, is when open enrollment starts. You have until December 15th to make a plan selection. Yes, I know the screen says January 15th. That is not a typo, because if you want your plan to start on January 1st, you have to be in by December 15th. Anyone who enrolls after December 15th through January 15th, your coverage won't begin until February 1st. So just please be aware that we need to get you re-enrolled. We need to get you re-upped if you're an Obamacare customer before December 15th. Last thing I'll say about the ACA, the marketplace, is that we're going to see a big push towards telehealth. So that's not just calling up your doctor, but that's virtual visits over Zoom. And so we're going to see a lot of primary care visits, as well as a lot of mental health visits. Carriers are going to try to encourage you to go to the telehealth for your services. So that's what's happening ACA-wise. What's happening short-term wise? Well, I love short-term plans, just not so much in the state of Michigan during the first half of the year. Now, why do I say that? Short-term plans are very, very low cost. Okay, they're about half, if not a third of the cost of a marketplace plan if you're not getting government subsidies. But the reason why they are so much cheaper is because of what you see on the right-hand side of your screen. They don't cover maternity. They don't cover preventative care. They don't cover pre-existing conditions. So, but if you don't need those things, it's a great way to get your costs down. The issue is that the plans are only 6-month plans. Every 6 months, you have to repurchase them. And every 6 months, the insurance company is deciding if they want you or not. So for the first 6 months of the year, a short-term plan is very risky if you're in the state of Michigan. But for the second 6 months of the year, when you know you're always coming up to open enrollment, it's not really a risk. So it's a good option, but do you really want to play the roulette game when it comes to your insurance? Please be very, very careful if this is a plan choice that you elect to go with in the state of Michigan. Your third option, which we probably have a little bit more of a flexibility here, a few more customers who are on a share plan. These are one of the Christian plans. So MediShare, Christian Healthcare Ministries. They're not insurance. It's just a collection of people pooling their money together in order to pay claims. It's a co-op, if you will. The issue you need to be aware of here is that not only is it not insurance, so they don't have to tell you their financial backing, but they're also faith-based and they make you sign a statement of faith, and they will only pay claims based on if you're adhering to that statement of faith. So you need to be very careful with these. It is a plan that's out there. In the past, we've used them a lot, but they quite honestly went through some growing pains. They had rate increases. They had customer service issues. They weren't ready for the influx of business that came once Obamacare was passed. So this is kind of waning in popularity. So again, not something that I'm a huge fan of. The last one that I'll say, and we didn't even make a slide for it, are the mini meds, the telemarketers of the world. These plans, if you heard of someone who bought a $99 plan with no deductible and no copay, sounds too good to be true, right? That's because it is. There's very little coverage with these plans when it comes to hospitalizations, when it comes to surgeries, when it comes to the big stuff. So very, very much buyer beware. We work with them, but I am very, very hesitant to put people in them just because of the fact that there's really no protection for the big stuff. And I want all of my customers to be protected when that uh-oh moment hits you. So let's next drill into what's going on in Michigan with health markets. So we've had an office expansion. We moved into our new Belleville office in September of last year. We already had to do a build out on it. And quite honestly, we're looking to actually get new space, which is going to be even bigger yet. So if you know of someone who has office space or retail space on Main Street, we're absolutely looking for Belleville downtown office space to be able to move into. But in addition to that, we continue to have the 3 different ways to meet. Of course, we will always welcome you face-to-face at the Belleville office. We can meet over Zoom. We can meet over the phone. We have a phone system, which now gives you the ability to reach anyone in our office. So please take down this new number and start calling this new number. It is simply 734-252-0064. And when you are there, you will be put into an automated system where you can reach Michelle, who's going to be our scheduler. You can reach Noreen, who does all of our onboarding, all of our payment issues, making sure you have medical cards, etc. You can reach Mandy, who does all of our current policy, customer service, all of our claims, all of our life changes. Or if you're really, for whatever reason, don't want to talk to the happy people, you can reach me and I will help you with all of your plan changes, your income changes, your updates, your open enrollment, making sure you are on the best plan for the new year. So here is my ask. Before you stop this video, I need all of you to do one thing. I need you to respond to us. I need you to reach out to us and tell us one of 3 different things. Situation number 1, I'm happy with my plan. I want to keep it. That applies to the people who have not had a medical change, had not had a health change, had not had a change of address or a change of income, and you're okay with the rate change that you're going to get for the new year. But we need to hear from the people who are happy with their plan so that we can check you off the list and get you re-enrolled and make sure that you're ready to keep your current plan. Situation number 2 is, I don't know if I need to talk to Mike. I've had some changes, not sure how it's going to impact me. Reach out to us, let us know. We will tell you if we should meet. We should tell you if there's going to be a new plan and advise you as to how you should proceed. Or situation number 3, I don't like my plan. I don't like my rate increase. I know I've had a change that impacts me. That person, we definitely need to get you booked. but we want to hear from every single person so that we can plan accordingly over that 45-day enrollment window. November 1 through December 15 is a crazy time for us. So please reach out to us and let us know where you stand so we can get you booked or get you re-enrolled for the new year and be done with it. But we want to take care of you. We want to service you. We greatly appreciate you. Please reach out to us. I hope you found this video informative. We'll continue to give you outreach, but do me one last favor, share it. A lot of people need to hear this information, especially when it comes to the family loophole, because that impacts millions of people. So thanks so much for your time. Mike Gatteri. Hope you have a great end of your holiday season. We'll talk to you soon.